Boom. We are live. We are back. We got to figure it out. I got to tell you, man, I got to get a little better at figuring out these stream launches. Every time it's kind of like just seeing if I can get us off the launch pad. And so far, I feel like we have a decent track record, I suppose. But
Doing great.
yeah, you know, what else am I supposed to do here? I'm just out here doing my best.
So
this is an old video for you. I have the swap video set up, or if we need to reference that at all. But yeah, man, first off, welcome back. I'm actually really glad that we're kind of starting to do these regularly, because one, it gives me a chance to continue learning from the master, which I literally love doing. And two, it gives everybody else a chance to kind of catch these periodic updates, right? Like as we're going through and seeing things unfold. So welcome back. Stoked to have you.
Yeah, thanks, Eric. Really appreciate it. And I think you said it really well. Like these updates are really good. I realized, I have a habit of just doing a video every day with like what's on my mind. It's almost like stream of consciousness. But maybe by breaking it up every week with like, hey, we've gone through another week now since huge events in May and June, in kind of like this quiet period where the stock's like kind of edging its way up. Everyone's looking for options activity. It's like, what's the story at right now? What can we look forward to? What's the summary for the week? So I think it's good to do videos like this, or,
yeah, man,
kind of segments like this.
I absolutely love it. So right now, for everybody's awareness, it looks like we have like 150 people on. Great to see everybody. Thanks for coming to hang out and chat some GameStop with us. So far, I'm not able to log into my platform, so we'll have to use some other tools when we want to start taking a look at some details. But that future us problem, there's only so many things you can worry about at a given point in time. That's just not one of them. So I figured a great starting point here is to lay a little more foundation on some of the components that make this thing tick the way it does. So last time we were talking about some of these different settlement rules, how they apply and how they interact with one another. Do you want to kind of provide a quick rundown of those to lay some of a foundation? And the reason for everybody else's awareness that's kind of learning more about the story or already aware of the story but curious why this matters, it's because when we're trying to think about the way that the product moves, a lot of the reason why it moves the way it does is because of these forces and these rule sets that underpin things. It's why whenever I'm doing videos and, talking about GameStop, I'm always very careful to say like standard technical analysis, in my opinion, doesn't translate well to something like GameStop. And a lot of that has to do with the fact that there are all these other injects that absolutely have a dominating effect on price and volume. So yeah, I'd love to start with an assessment / just general overview of these settlement rules.
Yeah, do you want me to go ahead and share my screen? Is that cool?
I would love that, honestly, just because I hate seeing my big fat face. So whenever we do that, it gets me. That's beautiful. It just gets me right out of there. Perfect. Which is better for everybody.
Exactly. Same here. So I think you laid the groundwork pretty well. I think that with other stocks, you probably wouldn't be ultra concerned about settlement because liquidity is pretty robust. You're going to have lots of buying and selling on the stock. I think with something like GameStop, the fundamental problem here is liquidity. With so many shares being dominated by household, especially in periods like right now, you can see tremendous volume. But where are the market makers and the broker dealers going to go to get shares? If they don't have inventory, they're going to need to push all the rules to the maximum. So we need to know how the rules work to get an understanding of why we see volume happen on particular days, days where we consider nothing's going on. There's nothing going on in the stock. Why would it suddenly have 100 million volume? Why would the price suddenly go up 5% here, 800% there? So that's where the rules become really important. So I made a tab here on the sheet. It's the third tab over. I actually combined the two tabs before into one tab. So I've got all the rules for settlement here. I'll make this really big over here on the left. So under regulation SHO, this is the settlement rules. We just recently moved into a T+1 settlement period. That means that, I buy a stock today. It should be settled into my account by tomorrow. Same thing with cash. If I move cash from my Bank of America account into my trading platform, it should take 1 day to settle now instead of 2, which is great. Supposedly, my understanding is options contracts still take 2 days to settle. Do you know if that's the case? I think it is.
I think so too. Yeah. So right now they're aligning off of the same settlement period. So I think I think it's T+1 now. No.
I think because it's a contract, not an actual equity, I think it's still on T+2, but I might be mistaken on this. So
I think,
that's a curiosity.
Yeah, the chat might know, and I also think I have a download of the actual release. So let me dig that up in the meantime.
Sure. But under regulation SHO or Reg Show for short, there's 2 particular rules that are really of interest: Rule 203 and Rule 204. They allow market makers to fail to deliver trades after T+3 and T+6. And we can actually see that in action on the stock. What's really hard here, and I think that there's a lot of people that get frustrated on the forums because people are really caught up right now on Roaring Kitty's buy of 4 million shares. But there's a reason to be caught up on that trade. That's a huge trade, right? And we get precious few moments in time where we get to see a huge trade and know when Ryan Cohen bought in 2020. So we actually have his trade dates from his disclosures. And so we can actually see a rule happening here, which is he bought on December, right here, he bought on December 17th, quite a few shares across 4 days, but you don't see gigantic price improvement until T+3, especially, basically. So you can actually see that happen in real time here. That's why people are so curious about Roaring Kitty's purchases. Not only do they match the size of Ryan Cohen's from back in 2020, but it gives us dates through which to follow to see if the rules pan out the way we expect them to. But the one of interest is Rule 204. It grants calendar days plus 25. And so down here, I basically mapped this out. You can see, let's say you've got a trading date like December 22nd. The market makers should clear those trades by T+3 or T+6. So those are trading days, settlement days. But the calendar days include the weekends, but not market holidays. So then you'd want to count those out 35, and they absolutely have to close out by C+35, if you want to call it C+35. So that's basically how all those rules work. It's just what people are looking for now is, okay, so we know a big trade happened probably, you can tell me what you think about this. I think he sold his options on the 12th and then bought the shares the following day on the 13th, or sold most of the options, like 80,000 of them here, and then 40,000 more, sold those there, and then bought all the shares. So what everyone wants to know is, are we going to see, because we didn't really see T+3 or T+6 produce very much, there is volume, but not a lot of price improvement. So are we going to see something on 35 calendar days, which is basically going to be somewhere out here in the days to come? So does that give people a good enough idea on how settlement should work? Is that pretty clear?
Yeah, that's super helpful. And I think that it paints a really important picture on why it matters, right? Because there's a lot of different perceptions of what it looks like. And also, by the way, for options, it is T+1.
Oh, perfect.
Yeah, so I grabbed, I threw a link in the chat for everybody. It's from the SEC, and the bulletin's from 27 March. And starting, I think it's 28 May, if I'm not mistaken. Yeah, 28 May, they switched over to T+1. Perfect.
I'll try to remember to, I'll just add it to my to-do list, grab that link and just, I ended up started linking everything on the sheet so people could just find it. So I'll just link.
Yeah, sweet. And I'll throw it in the chat here too.
Perfect, thanks.
Yeah, man.
So the hard part with calendar days is people forget about the market holidays. So this is a really good example to give because there are market holidays on this one. So let's say Roaring Kitty did buy, and I think it's pretty obvious he bought on the 13th because that's when he was doing the sandworm Dune meme, right? He posted the Dune meme on Twitter, and then the stock starts rising immediately. It's like, who just bought a whole bunch of shares? Pretty obvious. So what we want to do is we want to look at, what I do is I just actually pull up a calendar. So if I look at June 13th, you guys could all do this right now if you're following along. Look at June 13th, that was a Thursday. Then you go out 5 weeks. So 1, 2, 3, 4, 5. Should be the 11th, right? Is that right? Let me try this again. June 13th. That'd be the 20th, 27th, 4th. Oh, sorry. And then we're going to go the 18th, right?
The 18th, yeah.
All right. So yeah, it should be 25 days though on here, trading days. So another way to do it from the here. No, so that's not a good way to do it. So yeah, you want to go for it.
I was going to say, we have to add another column in here for you, like between A and B that auto populates it for you.
I've always thought about doing that. I've just been like, that's going to be such a nightmare to actually add onto the sheet though, because you'd have to go back and do so much.
Oh, I see. I was just thinking insert it and then have it calculate X number of trading days from whatever your trigger date is.
Right. But it's tricky because, so like, if this is the day, right? So I've got it highlighted now. Here's the trade date. Here's when calendar days plus 35 is. However, there were 2 holidays between there and there, right? And those don't count.
Mm-hmm.
So you got to actually add 2 more days. So like,
yeah,
that's going to be tricky.
Yeah, I'm almost well, I don't know about Google Sheets, but I'm almost positive that you could import like an actual trading day function.
Right.
Yeah.
So basically everyone's looking at a bunch of days in the time to come. It really matters though, because maybe to get to one of the other topics you wanted to talk about is we have incredible options interest on July 19th, right? So if this trade still needs to be settled and is possibly going to be occurring sometime before the 22nd, then that means the 19th is a really interesting day, right? And we're seeing lots of options interest there. So do you want to maybe talk about that a little bit?
Yeah, I wish the platform was up and running so that I can like walk people through it. I'm trying to think of the easiest way to show you guys this, because there's a lot of things that I would try to show you. Maybe let me see if the platform comes up in a little bit and then we can pivot back over to the options. I'm hopeful that maybe they're just updating it and it'll come back up in a little bit.
This is like easy to look at just cursory, right? This expiry just happened. A lot of calls expired in the money, which is wonderful for the stock. If you're long on it, should produce lots of buying. This is next week. And this is like something like 40% of the OI going forward, all concentrated on the third Friday of July. And again, none of this is financial advice. You know, that's a near dated option that's extremely risky, but there's a lot of people front loading options into next week. So I'm curious what you think about this, because this seems unusual to me.
I think, well, which part seems unusual to you?
Just to have such a concentration here with such a near-term expiry.
No, that's essentially been the standard so far for GameStop, hands down.
Okay.
Yeah, so what you'll find in general in most products is the front standard expirations are almost always the busiest. And then there can be pockets further out of other things that are showing activity, but the vast majority of instances, you'll see the overwhelming activity in the front expirations. Now, what I find so fascinating about GameStop's options in particular, though, is the variance. That part is very interesting, where you can see the options chain. Actually, if you go back to that other screen. Oh, I like that background. Yeah, so what you can eyeball this and you can see inherently where the standard expirations are, right? Like just look at the numbers that are much higher than the surround. Exactly, like you can straight up eyeball it. Now, one of the things that's so interesting about GameStop though is the variance between further out expirations in closer ones, because to your point, your eyeball of seeing like heavy near-term volume or OI in the option space, it's not inherently anomalous. That's pretty normal. But what is fairly anomalous is how big it is comparatively, front versus further out. But I've noticed that essentially being like a rolling trend with GameStop. It's actually been one of the most interesting things about the product to me is like, I've talked about the way that I buy options typically. I've shared a video a million times. I'll share it again. And it's because I think a lot of people light money on fire with the way that they buy options trying to trade something like GameStop. And specifically here, what confounds me is going so short term perpetually, because those options are going to decay the fastest and they will experience more of a move if you do eventually get a move in your favor. But if you don't, they decay pretty fast. So yeah, the kind of a meandering answer. The short one is seeing the active options being really focused in these near-term expirations. That doesn't surprise me. Seeing it centralized in 19 July doesn't surprise me because that's a standard expiration. And the thing that does interest me though is just how big of a variance there is between the front expirations and then like the next month expiration. Having a gap that's typically like several hundred thousand OI difference, that's interesting to me.
Cool.
Yeah.
So I think what's also interesting is the community has largely avoided options because I think historically they got burned on out of the money options.
Mm-hmm.
I'm sort of curious what you're thinking about. It just seems like in this last couple of months, there's been far more in the money options than I remember there ever being, because I can remember, this may be just like me misremembering or wanting to remember something, but it seemed like every week, you know, people would be bummed out because they would see all these out of the money options on a Friday. But these days it seems like there's more landing in the money. So maybe, do you think maybe people are learning, picking up on some stuff?
Yeah, that's a great question. And I'm not exactly sure because I don't have a great understanding of the standard purchasing behavior before to like draw what I would consider to be a more direct comparison. But if I were to take a swag at it, I think a big part of that also comes down to people learning more about the products themselves. So for example, if there's a lot of folks from like the ape community that are trying to pitch into this idea of creating a gamma ramp. Well, you need a mix of in the money and out of the money options to start that process. So I think there's something probably coming from that angle. I also think that there's another angle that just focuses on how much raw dollars you can make. So there's a lot of reasons to go in the money. Like typically when I'm buying options, the overwhelming majority of instances, they're greater than 60 days out. A smaller subset sometimes will be 30 days out. Like I typically won't go same week unless I'm playing something very short term that I can look at decisively. But I most of the time will be a little bit further out in time, and it's almost always for the base position at the money or slightly in the money. And it's because you get a better dollar for dollar move with the underlying at a higher delta. And again, if I can get my platform to wake up, I can walk you guys through kind of an example that will help you visualize that concept a little more in depth. But the way to think about it is out of the money options are cheaper. They will compound as a percentage return much better than in the money options. They require a bigger move in order for them to like really start printing for you. And they will have slightly different theta decay tendencies depending on what the delta is and stuff like that. So my general approach to most things in life is actually balance. So I don't inherently do just one. I typically will have a base position a little further out in time, typically at least slightly in the money, if not deep in the money. And then I'll add what I call kicker options. And those are nearer term expiration, further out of the money. And that's really to capture a magnitude of a move if I get it, because those options can compound super fast, but they are fighting a steady headwind of theta decay. And unless you get a big move real quick, they become worth less super fast.
So let me run, because I haven't watched I should have watched your video about GameStop options, but let me see if I'm learning correctly from you. So, this is our standard expiry for July. Here's our standard expiry for August, and then we've got September and October. So this is about 3 months out. So I would look for something in the money here as like my base position. So right now we're at $26. So we're going to choose something around one of these strikes here. And even though they're, go ahead.
Does this have delta?
This is just Yahoo Finance. I'm a very adept trader that uses very powerful tools.
Yeah. Yeah, I think that's okay to ballpark it there. Let me see real quick. I have another platform I can also look at. What expiration are you in right now?
I'm in October's.
Got it. Yep, so those are 98 days out. That's a little far from where I would go. For something like GameStop specifically, I would probably favor like 20 September. Okay. The only reason for that is, like, again, GameStop is, I say it all the time, it's different. Like, you have to do things very differently with this thing. And when I look at the options here, they're not crazy priced. I would probably be looking at least like a 65 delta, but then you have to find liquidity. So the most liquid choices I see look to be about either the 25s. That's a really heavy strike. There's 2,600 OI there. So that tells me that there's transactions in there, they're bid at 515, offered at 550. So that would be fine. I personally would probably want a slightly higher delta because those options are a lot of extrinsic value. So those are also going to decay a little quicker than I would prefer. And
so what you're meaning by that, let me just slow down a second. Sorry. So since the strike is 25 and the price is 5, you're basically, you got to value this at basically like $30, and the stock isn't at $30 yet. You're $4 short of that. So $4 worth of that is like extrinsic right now, wrapped up in theta.
So the way to think about the calculating the amount of theta in the options, it's the difference between the current price and the strike price. So current price is 2604. That strike price is 25. So an option price has two components, intrinsic and extrinsic value. Intrinsic value, simply put, is how far in the money it is. So in this case, it is $1.04 in the money. So if we take the midpoint between the bid and the ask to value the option, let's just call it 525 just for ease. So you would take 525, that's the total value of the option. You would subtract out your intrinsic value, which is $1.04. And then the remainder of that is extrinsic value.
So that would be $4.21. $4.21.
Yep.
And that's all basically now subject to theta decay, right?
Exactly. That's all going to slowly decay away. And the good part about being further out in time is you decrease the rate of theta decay, but you're paying more upfront, so more total theta can decay.
Right, so, because you paid 525
exactly
to buy you that time. So yeah, perfect. And it decays exponentially, right? So like on the near term, you're only going to lose a little bit of that extrinsic value. But then, like, let's say 6 months, or this is 3 months out. Let's say a month has gone by. Now it's going to accelerate. 2 months go by, it's going to accelerate a lot. And then as you get closer and closer and closer, oh, there you go. You got it right there on the screen.
So I totally stole the screen share from you. But you're actually doing a great job explaining this exact graph. So what this in the top right is, this is just showing you the behavior of the Greeks. But what you'll notice is theta decay starts to really accelerate once you start getting within 60 days to expiration. And then it becomes highly exponential within 30 days. Okay. So, and this simply put is because options, they have to make a choice. All of these out of the money options, they are going to go to zero. They have no intrinsic value. Right. So as you get closer and closer to expiration, these are going to move way, way faster. So that's why you see this accelerate to that degree. So when I'm using something, I'm just using ORETs because, again, I don't know if I've mentioned, but my platform is down. It's kind of like if I don't have my pants on, like not having the ability to open the platform is like. Wait, literally.
You're wearing pants right now?
Yeah, well, actually I'm not. I'm wearing short shorts, but but so if I look at these, there's a bunch of things I'm trying to balance. The first thing is I want to be far enough out in time to give it time to work. However, I know the further out in time I go, the more expensive they get. The next thing is if I do not get a high delta being further out in time, I'm not going to experience as much of the move because. So
experience delta for me. What's delta?
Great question. So there are a handful of Greeks that we care a lot about. Delta is one of them. So delta does a few things for us. The high level view of what delta does is it tells us the rate of change of an options premium per 1 point move in the underlying price. So that means, in this case, if GameStop goes up by $1, these options, ceteris paribus, everything else remaining the same, will go up by 64 cents. That's what gamma is. Or I'm sorry, delta. So delta tells us the rate of change of an options premium. You can use it for other things. It's kind of a back of the napkin tool for probability of in the money, probability of touch.
So in like layman's terms,
yep.
If GameStop goes up 1% tomorrow, your option won't go up 1%, it'll go up 0.64%.
It's based on a dollar move, so it's not based on percentage moves, but yes, it would essentially move a fraction of the dollar move.
Okay, a question, I have another question.
Yeah.
So that's algorithmic though, right? That's controlled by options pricing, which is inherent within how their schema works. But what if demand comes in suddenly and like wipes out all the sell orders on that particular strike? Could you sell it for a higher amount because it's just in demand at that moment?
So typically if an option comes in really high demand like that, the bid ask spread would tighten. So you would gain a little bit more liquidity actually. Now, if there's a ton of demand, because one of the things to always remember with options is they're derivatives. Their entire existence is derived from an underlying asset. So if we're looking at it in a vacuum, just in a vacuum, and the options are moving a lot, and we're just pretending for whatever reason the underlying cannot move, the underlying is frozen, then there would be observably little change in the value, the price of those options. This is in a vacuum, which is not reality, because as that's happening, the underlying is probably moving for one reason or another, which then creates kind of this cycle that we can see where as people are piling into options, the market makers typically are the other side of the trade. They will start hedging their positions by using the underlying and other options, which can move the underlying itself. So
there can't really be a buy supply imbalance, because if a lot of buy orders come in for a particular strike and expiry, the market makers will just write contracts for that.
Yeah, and if it's in that scenario where it's very one-sided order pressure, they can widen their bid-ask spreads to manage their risk. Market makers are
slaves. And in that case, one sec, sorry to keep interrupting you with questions. So in that case, like let's say like Roaring Kitty came in and wiped out or bought all the 20 strikes, right? For June 21st, I believe it was. If you had already held those particular contracts would you have seen a sudden surge in the price of your options and have been able to like move on that, beating the market makers to it? Or do they basically beat you to the punch?
It would be the market makers leading the change in the price based on their assessment of the order flow. So
Okay.
you wouldn't see the price move unless it was adjusted by the market makers. Again, looking at this in a vacuum, pretending that the underlying isn't moving, looking at just the options.
Okay. Cool.
Yeah. It's one of the things to always keep in mind with something like options or really any other derivatives. The market makers are very much slaved to the order flow. So if there's persistent buying, they have to continue providing a market, right? That's how they make their money. So they're providing a market to this one-sided order flow. Well, they have to continue hedging all this risk. Their ideal scenario would be to have a bid and an offer, and you want to buy options, I sell them to you, and then I immediately turn around and neutralize and flatten them and buy them from somebody else that's selling them, right? And essentially collect the bid-ask spread. But if we see really strong one-sided order flow, it actually puts them in a terrible spot because they now have to accumulate massive inventory and nobody's offloading their risk, which is what they would prefer to be able to do. So in those instances, they can absolutely widen the bid-ask spread, and they can say, the bid-ask spread is an expression of what they're pricing volatility at, but then it's also an expression, typically there would be a size, right? So they would say, I'm bid at 515 for 100 lots. I'm offered at 550 for 500 lots. They can offer different sizes, and that's to help them manage their book, right? So in that case, they're really trying to work on the offer side. That's why they're giving you more size there. And they're trying to be lighter on the bid side. And that's typically a way for them to manage their book.
So are you seeing this behavior now? Are you seeing an acceleration of options buying on GameStop and then therefore a widening of the spreads?
It's not a universal widening of the spreads, but one of the things to always remember is on a relative basis, you can always come up with kind of like an assessment of what's something that's liquid, right? So let's check out just an example really quick in SPY, and we'll go to that same expiration cycle, which I think is here. Yep. And we were looking at like a 64 delta option. The reason why I use 64 deltas or something like that is to normalize across the different products for the basis of a comparison. So right here. So these options, they're bid at 26, offered at 34. So the process to like assess liquidity of something, I would literally take 1734. I would subtract 1726. That gives you the bid-ask spread, 8 cents. You can now take that bid-ask spread of 8 cents, divide it by the strike price.
Right.
Multiply that by 100. Now you have a percentage, and this is normalized to everything. So the percentage of the bid-ask spread here of the strike price is 0.014%. So even though
is that automatically calculated somewhere? Do you see that showing up somewhere?
No, I do it.
Oh, okay. All right.
Yeah, they don't normalize it for you. What I've learned in a lot of instances, they don't make this stuff easy for some striking reason. We also use lots of silly terms when we're talking about this stuff. So anyways,
I'm finding it interesting that you target the 64 delta. Is that common? Because look how heavy the activity is there for the SPY.
It's not so much that it's a 64 delta. It's more that it's a round number. You'll notice that the 550s, right? Big number. Yeah. Humans are hilarious. We're so predictable. 560s, bigger number. 565s, bigger number, right? So $5 increments. It's just a very natural cognitive bias. And then the other thing is, if there's the start of order flow to an option, it's typically followed by it. So like, let's say, for example, I wanted to buy an option, and for whatever reason, I wanted something around a 60 delta. I'm going to gravitate to this one because there's more liquidity here than everything else.
And everyone else is doing the same thing. So it becomes like a kind of like a bull rush or like a crowd mentality.
It can be. It's really more in pursuit of liquidity, though. It's not that, oh, I think other informed traders are going here to 555, so I want to do what they're doing. It's more, I don't want to pay as wide of a bid-ask spread.
Yeah,
So
that makes perfect sense.
I'm going to do everything I can to keep this as small as possible. Now the market's closed, so I mean, realistically, this has a similar size market, right? So you could easily go here. The probability of you getting filled here versus here at the same bid-ask spread is actually very low. You'll probably get a better fill on the 555s. So just finishing the example quickly, going back to GameStop, looking at these 64s. So right now, and other people can try this, right? So you just take the 550, you subtract 515, that gives you 35 cents wide. You divide that by 25, multiply by 100. Your bid-ask spread as a percentage is 1.4% as compared to
triple.
As compared to 0.014%.
Oh, it was 0.0. So huge overspice.
Massive difference. And that's because it's a volatile product. If things are more volatile, they will have wider bid-ask spreads. It serves as kind of like a natural braking system for markets. So that's just another thing for people to be aware of. If you're trading small contracts and you're not trading a ton, it doesn't necessarily matter a bunch, but it will explain to some degree why you will find people central, again, 25, 30, it's the same thing. It's the same mental tendency to look for these round numbers, and then people will gravitate to where the rest of the volume is.
So a significant difference though, like if you're looking at the delta of 64 versus the delta of 82, that's going to cause a big difference in the behavior of the options contract, because if GameStop goes up $1, I'm netting way more of that move. So way more is intrinsic there, right? Is what we're saying there at the
That's exactly correct.
What strike are we seeing there? The 20s. That's a big difference. So you're buying,
that's exactly correct.
You're buying way more of the stock and you're gambling way less.
That's exactly the way to look at it. It's a way of gaining leverage. So every options contract holds up to 100 shares of the underlying, right? Each options contract is worth 100 shares. The way you can look at the delta is that tells you how many shares the position is behaving as right now, right? So remember, delta tells us the dollar change or it tells us the premium rate of change for every dollar move in the underlying. So essentially each one of these is behaving like one share.
Nice.
So that is exactly why you will see these move and give you a better gross dollar return. However, something like this can give you a slightly better compounding return where you're putting up less money, right? Because these are call up 525 versus these where you're paying 760, something like that. So these you're paying more, but if you get a move, you'll make a bigger gross dollar amount. These you're paying slightly less, but you will see a slightly less dollar move for the underlying itself. So that's the cool part about options, is that you really have the ability to construct positions that make sense to you, that really align with what you're trying to accomplish. So typically I'll have a base position that looks like this. So out here in the 25s, and I literally have these right now. And then I'll put on shorter term positions, typically 2 weeks, 3 weeks, something like that, if I start seeing price movement. And I'll do something that's a little closer to at the money or slightly out of the money. And it's because these can compound a lot.
So the delta you're looking for on these is maybe somewhere around 0.5?
Less than that. So typically I would be looking like a 30 delta, 40 delta. A big thing is making sure that you're getting exposure to enough gamma, which this doesn't show me for some reason. But gamma, in a nutshell, is the rate of change of delta. So that's essentially an option's ability to compound. So options that are closer to expiration, that's what this is here. This yellow line represents closer to expiration, will have a higher gamma. And that just tells us that the delta is going to change faster, which is where your compounding return potential comes from. But it gives and takes. If it goes against you, it means that you're going the wrong way super fast. So it's a delicate dance. But,
so I'm hearing a lot of talk about options crush recently, right? Because we just had a period where the stock cooled down a lot. So, and I think that's what you just kind of like talked to a little bit, right? The idea of like it turning against you. you all of a sudden your options lose a ton of value very quickly. Would that be an options crush right there?
It's kind of a perversion of the term. I get what they're trying to say. Typically, when you'll hear people talk about options crush of some sort, we generally are referring to volatility. Actually, we normally refer volatility crush. But what that framing sounds like to me are people that have short-term options with really high theta, and then their options are decaying away super, super fast. So there's a lot of options. Let's say, for example, if we go to this, all strikes, I think these have a 125. Yep. So there's 56,180 of these options way out here at 125. And they're bid at 5 cents, offered at 6. Now, again, this is not my platform. This is just not my boat. But typically, I would have theta in here to show you how much this decays. But on a daily basis, a huge chunk of this will decay out. So you could probably ballpark it to about a penny, which would be $1. But that's a fifth of the position after one day is gone, just gone. So they will decay very, very fast. And most of these options that have these tiny little deltas, they can compound incredibly if you get a big old move in your favor.
Here's a question I've always had. So like looking at the strikes, they're at 100, right? So stock starts moving. Let's say the stock moves up $20 tomorrow or on Monday, we see a settlement cycle, hypothetically, not financial advice. Stock goes from 25 or 26 to 46, right? Roughly speaking, that strike, if I was holding one contract, because the underlying's now moved $20, I should get, because it's got a delta, what's the delta on that guy?
It's 0 because it's so far out of the money.
Right? So it won't move in value, right?
It will. Because delta, it goes beyond 2 decimal points. So there's 3, 4, 5 decimal points to these really far out of the monies.
Okay. And then it'll only start changing in value as the strike approaches 100, right?
Yes. So this, either you would need to see the underlying move in the favor of the position. So in this case, if we're long these, you would need the underlying to go up, or if volatility exploded for some reason. If volatility goes up a lot, the premium of all options goes up. Now,
who is quantifying, or is it a static calculation for just volatility?
So volatility, when you say are you saying like who's determining it?
Because it's a function of what the underlying is doing, right? So the stock
it's a function of what the underlying is expected to do.
So how is that derived?
Great question. So volatility is a absolutely fascinating component of options. And essentially, there are different types of volatility that we use. So on the trading side, more often than not, we use implied volatility. This is where we're taking whatever volatility has already been baked into the price and we're pulling it out and we can see what it is. That's implied volatility. Now, what you're referring to is what's called forecast volatility. This is what market makers are doing. They're essentially maintaining a volatility surface model that postulates what volatility is going to be going forward. There are a lot of different ways to create these models. They're proprietary by nature. The reason why they're proprietary is because that's literally, if you can price vol better than that person, you can make more money than them.
So we'll not be able to actually see if you want to call it the forecast volatility, but we'll be able to see its effects by the pricing of the options as things are happening. Okay. Because they're at the end of the day, they're the ones selling most of the options. So in theory, they could suddenly price options very, very cheaply, crushing out all the options, but that's a risk for them, because if the stock were to then move into those options, they would have potentially sold a bunch of them at that cheap price and they get blown out. So it's in their interest to do this and not cheat on pricing the options.
They have some wiggle room, but not a ton, because it's still a consensus driven supply
Okay.
and demand market.
Right.
So if I see them price something too cheaply, I can immediately tell there's an opportunity. So people like me that are even, I'm still really dumb, but I'm not super dumb. So like if I see an opportunity like that, I'm going to take a shot on it. So speculators like me that are looking for that stuff will then flood into those products.
And they could do
then
it to one another too. So if like one market maker messes up on
exactly,
their options pricing, another one could buy them all up and then sell them and immediately make a bunch of
exactly.
money. Okay. So, and
And
how many options, sorry to keep interrupting, how many options market makers would there be? Because people talk about Wolverine, people talk about Citadel. I don't know if Susquehanna does options, but how many on one stock would there typically be involved in making this market?
it's a great question. Really difficult to know. Really difficult to know because technically
But
speaking, I could even behave as a market maker.
okay.
So yeah, it's in terms of like large market making firms, you hit a lot of them because the other component to this that adds and muddies the water even more is there are prop trading firms and high frequency trading firms that
Okay.
can also essentially behave short term as market makers. They have a different game, right? That's not their primary modality, but they can interact with things that are mispriced and essentially either supply liquidity by taking the other sides of trades potentially, but
Or take advantage of some of this mispricing.
the mispricing, absolutely. And
Okay.
algorithms are high frequency tradies are literally hunting for that. They're so sophisticated to the point where they care about how close they are to the exchange. They're paying millions of dollars to be X bit closer to the exchange to reduce latency.
And so there was a clip on Superstock about just that today or yesterday, right? Famous
awesome.
clip from it was quite a while ago. It was like over 15 years ago, but talking about the latency and how much they're paying, not just for speed, right? For internet speed, server location, but they're paying for particular levels of information and quality of information from the markets. And the markets are actually making, the exchanges are making more money on that than they're making on offering those premium packages for information
Yes.
and quality and speed of information than they are on the actual trading. So, but what I'm curious about is when you're showing the volume on GameStop options as an example, it seems so low to me. Is that still going to be an efficient market where like a strike and an expiry only has volume on a day of maybe 50 or 100? Like if you go to the daily volume on some of these, or even lower in some cases. So is it still efficient?
Yeah, it is. It'll always be relative to the size of the product, but yeah, like I still absolutely, because relative to the size of this stock, like there's actually a ton of activity in here, like a crazy amount. So
Okay.
it's almost the inverse, right? So like if you look at like other companies, well, GE's kind of big, but I don't know what this will look like. I'm literally seeing. Yeah, look at the OI here. 14, 24, 183. And this is a $159 stock. This is GE. This is a big company. And you can see just how little activity there is here. And this is big for this product, the 19,500. So it's almost actually the inverse, where GameStop is crazy active for the size that it is.
We should see efficiently priced options.
Moderately. The reason why I say moderately is because of the way that this moves, which is, again, what makes it so fascinating, is from a market making perspective, you literally have to be ready to be ran over by a train whenever you're making a market in this. So,
what do you mean by that?
The fact that GameStop does this,
okay,
it goes from 17 to 48. That, from a market making perspective, being on the other side of those options trades, that's hell. Because they are having, again, this is kind of the entire concept of a gamma squeeze, right? It's driven by market makers, and it's because they're getting fucking destroyed, and they have to find a way to manage their risk in the positions.
And how would they do that? So we know that market makers have come out and said they've made a ton of money on GameStop, right?
Because the spreads are so damn wide.
All right, so they're making money on the spreads. How else would they be mitigating risk with on the options front? For somebody that's not in the know here, because occasionally they are going to get run over, right? We saw
Yep.
options printed 2 or 3 times now, at least in the last 2 to 3 months. More actually, probably, because May 3rd would be a big options printing and the whole week to follow. May 13th and 14th, but then multiple periods since then. There would be great opportunity to buy into some options and sell some options, make a ton of money. So what could they be doing because can they play them themselves too?
Absolutely. I was literally going to say that is one of the first things that they're going to do. Is hedging with the underlying is one tool that they will use, provided that it's accessible, but they will use options tremendously, because the other thing that it's really important to remember is that option market makers, they have a book of a ton of things, right? It's not just individual strikes, that counterparty to a person's single trade. They're on the other sides of thousands of trades. So they can use options. That it's actually why they're so interested in all of the Greeks, because they can mitigate a lot of their risk by using options. Or even more interesting, actually, I gotta get my tinfoil hat. Do you like my tinfoil hat?
Love the tinfoil hat. I need to make one.
Yeah. I had to put my tinfoil hat on for this part. But the other thing that they can do is that if they think it's an informed order, like the counterparty to the order knows something, they can run with the order. So they can
that is something that I never knew about until very recently. The idea that orders are flagged, right, as informed versus uninformed.
Absolutely.
What does that mean? So you're telling me every options order, is that true for equity orders too, has a flag on it that says informed versus uninformed?
I don't know if it's every single one. I couldn't speak intelligently to the actual process that they flag it, but what they can do is identify order flow that looks not like standard retail, right? Like the vast majority of retail trades, they're going to assume is uninformed to a degree, and they're not necessarily going to worry about it too much. But if they see somebody like Roaring Kitty, for example, I spoke to one of my buddies that's a market maker for this exact thing, because I was just curious. I was like, how would you even manage this position? And the first thing he said is that he would immediately hedge, because he doesn't want to have open-sized risk with something that looks informed. So the way that it looks informed is that it's really big size, somebody taking a big bet, and they're also willing to enter multiple times, right? Like they're building a position. So that starts to look like somebody knows something. And market makers, they're wildly, wildly educated in terms of what order flow is normal for a product and then what order flow becomes anomalous. They're fantastic at that. So it's another way that they can identify opportunities in things like mergers and acquisitions. They can see crazy order flow for earnings. They can see insider order flow and then try to front run it. So essentially, they're looking for certain kinds of behaviors and patterns that they identify as different for the underlying, the standard, run-of-the-mill transactions. And they're looking for things like size, persistence, the way that they're structuring the trades. And then they can make a assessment and think, okay, do I want to bet against this guy? If so, they would underhedge. If they don't want to bet against the guy, but they're not sure that they want to run with them, they'll just essentially hedge the position totally and just run a pure hedge and collect what they can off of that.
Or so you said earlier, running with them, would that be why we saw so many January 21st at the 20s? Because while he owned 120,000 of them, a ton of them came on top of his, right?
Yeah, it's really, really hard to discreetly identify who was piling on, but there was a lot of people piling onto those.
Right. So a lot of household and retail could have after the fact, but we saw, I believe, his position come in, got built during that week of the share offering. But then there were too many of these block orders of 5 to 10,000. There was more than just him doing that kind of a play. So that could be people just basically mirroring his trade, kind of like I think you've said you do at times, right? A flag or an alert comes up and you're like, well, I better jump in on this because someone's building something.
It's literally how I found his order. And that's the funny part. That it's one of the funniest things about this whole story, at least from like my foxhole, my little view, is the fact like I had no idea it was him. Like I don't know who it was. I'm just sitting here, just watching blinky lights and stuff, and I see something that starts looking interesting, and I'm like, wait a minute, what the fuck is going on?
Yeah.
So I start paying much closer attention, and I'm like this right here. If this is as big of a red flag as you could possibly get, you have this persistent sizing, 5,000 centralized at the 20s, 21 June. It's the same position, over $3 million positions, and they're going on within moments of one another, right? So this one went on at 12:03, 12:52, 11:38. Like we're just pounding this position, and it happens 11:32, 28. Like it's incessant. So that lights up on my alert system literally like a freaking Christmas tree. And the first thing I think of is this is an insane amount of conviction, right? Like, because you can see what the standard premiums are for positions that are being built. And then you start seeing blocks come in the 2 millions, 5 millions, and there's a bunch of them at the same time.
Maybe a follow-up question on that. Sorry. I was
just going to say, in that instance, for an options trader, that is like a big, blinky, flashy red light. It's so apparent.
And the market makers are going to have even more tools to see that.
Absolutely. Yes, by the time I see it, they probably have already built a position.
So people are really excited about like these 30s for next week. Is that anything like this at all? Because I don't know, and I haven't spoken to it at all.
Yeah, definitely not like that at all. So for a comparison, if we look over the last 30 days, the biggest trade was 875, which I'm not dumping on that, right? Like that's not an insignificant trade.
That's a $1 billion options trade for.
But that's the other hilarious thing about like looking at this stuff is just how much it like skews the perception of reality. Let's take a look at the 19 expiration coming up. So the biggest trade for this upcoming 19 July expiration is 234K. Was the biggest trade. So again, not insignificant, but being in the world of GameStop.
What's the strike on? Where do you see the strike on that one?
Those are 30s.
Those are the 30s. Okay.
Yep. And I think this was a 5,000 lot. I think this came through with a couple others.
It got broken up.
Exactly. So I think this is the entire order. But I thought so I think it amounted to 48.10 here. And then my guess is there was probably obviously a little bit more that got tacked on probably to round it out. But the wild part here is because GameStop is so freaking crazy, when you see like, $250,000 positions come through, like you're numb to it. You're like, yeah, okay, bro, whatever. Like wake me up when this is $3 million. So it looks like something could be going on, but it doesn't look literally anything like what we saw going on back in the original squeeze. Right.
So here's a question. We know that he built that position and he had to have had about $170 million to do it, right? Because he bought 120,000. That would have cost like 60 something million.
68 million was the options.
For the options. And then there was like 100 million for the shares, right?
Yeah.
Somewhere around there. All right. So was there an opportunity to make that amount of money into the run up to $80? Conceivably options only. Could that have been accomplished off of like a small starting position? How much could he have made playing that from before? Basically, this is like early May into May 13th and 14th. I don't even know like the magnitude of, because I've never played options. I don't know how much you can make on them. Could that have been done?
In terms of when you say could that have been done, you mean making how much? So
making enough to buy that next position. He would have needed about 170 million to buy those shares and buy all those 20 calls, right? So my theory is he needs 170 million in cash on May 15th to start building his next position. If he started with, say, $5 million in cash on May
I
1st,
see.
can you turn 5 million on May 1st into 170 million 2 weeks later? Is that
Could
possible?
could he? I would have to look closer at the numbers. Again, if my platform worked, I could answer it actually for you immediately. But I'm trying to log in again now, and it looks like it's still down. But it would be highly improbable, is the way I would frame that. Like the probability of turning 5 into almost 200 million over the course of those 2 weeks, I don't I don't think that is a highly probable scenario.
So theoretically, it makes more sense. We're not trying to nail it down or anything here at all. We're just spitballing. But he probably came into, there you go. He probably came into May 15th with like already a large cash position established.
Well,
And he probably had to have done something similar with Chewy because out of nowhere, he shows up with 9 million shares of Chewy, which I don't know how much those cost him. But it seems
that
like,
yeah, that one's crazy to me too. The whole Chewy thing, and I think one of the most interesting parts about that one is I guess technically he could have used options to gain that exposure, but that's still a big position.
right, we haven't seen his position exactly, right? We don't know if it's shares. They would have to be reported as a 13G though, short dated options, right? Less
I
than
don't
60
know that.
days.
Yeah, you would know that rule better than I would. Because I originally didn't even know on the 13G if it could be shares or not. I had to look that up, and I found out that it could be options. I mean, if it could be options, and it could
Yeah.
be options. That I learned. I also don't know if there's a difference between the G and the D.
I don't know.
Yeah, that part I don't know either. Maybe somebody in the chat knows. I imagine
I think on
the
a
chat.
D you show the position. On the G, you don't have to show what the purchase. I mean, well, no, the purchase date or the event date is noted on the G, but the price paid is not shown or anything. Like the positions aren't shown on the G. Just the like what the representation is in number of shares
Got it.
and what percent that is of the outstanding. Um, so yeah, super curious. I just, when is he going to come back? I don't think he's gone for good again. But are we going to see more details on that position? Because that's crazy. Did not expect that at all.
I'm not even gonna lie. Part of me expected whenever. The reason why I keep taking this off, in case you don't know, is that a solid aluminum foil hat vents as well as you think it would. So it's kind of like
cooking your head.
literally. And I tell you what, my brain is already too close to like a steamed vegetable, so I don't need to actually become a physical one. I I think I think there's such a crazy potential for him to go so many routes after that G. Like, I don't think it's any sort of happenstance that he hasn't shown a portfolio update for about a month now. I know that there was a lot of people that were really expecting to see something like yesterday. That part I find just so intriguing, right? He was pretty rock steady with these updates, and then he just stopped for some reason. That
Yeah.
I find very curious. I don't know what to make of that. Do you have any ideas?
Well, we can look at the timing, right? So
Yeah,
let me look at the timing. I'm going to pull up. He has only posted his YOLO updates since returning on
2 to 13, I think.
June 2nd was the
Yep.
first one. That was a Sunday. And then the stock surged like crazy on June 3rd. Then he posted another update after that, like that evening. And I think the key there, I think what he was trying to telegraph was, I'm not pumping this thing, right? By just showing my position, because he could have taken action and he made no action, right? Because the media like was blaming him for the events for tweeting, right? On the rise up to 80, right? So by not taking any action during this Monday morning pump, he's basically saying, like, I'm not actually causing this to happen. He did one more update on the 6th. And again, his position is completely unchanged on the 6th. Then he live streams as it's pumping again on the 7th, 6th and 7th, doesn't do anything with his position. So you could count the 7th as a YOLO update.
Can we just pause there for a second and just soak in the fact that we're looking at a portfolio that has $250 million in gains on the day? Like,
right? A quarter,
dude, like,
a quarter
what is this? Like, what is this? It's
just
insane,
all GameStop,
bro.
just all GameStop.
It's insane. I find myself talking about this stuff and I'm like, what the fuck am I even saying anymore? It's like,
right. At points in time, you kind of stop and you like realize how absurd this whole scenario is. I had a moment of that when I was just like working on the spreadsheet today. Like I'm working on the spreadsheet as I'm doing, just chipping away on it. And I just stop and I think to myself, like, this is actually crazy. Like everything that's going on with this story is insane.
Literally, it's so wild to me that this is like the reality. And this is a single dude that's just sitting in his house using Yahoo Finance for his chart.
And he's just using, what's his platform he's using here? E-Trade?
That looks like whatever that's not even like a platform that I can't open, right? Like I can't get in my damn platform. He's just logging into the web browser and he's just using like the standard website.
So yeah, he basically exposed his portfolio on Sunday, stock runs, he exposed it again, doesn't make any changes. Shows his position again as stock goes bonkers, and then live streams and shows it live as it's then losing like $300 or $400 million in value.
And he's laughing and drinking a beer, bro.
Madman. And then his final update. No. Then it was
on the 13th.
He still hasn't changed anything, right?
Yeah. No. He stayed static.
No change. Company has now sold 75 million shares. And what does he do? Basically doubles down.
Yep.
Like if that's not, because, you know, I see all these comments. I just saw a comment on my channel today. Someone basically saying like, Roaring Kitty's going to leave. He's lost faith in the company. He just spent hundreds of $millions on stock. You know, like
there's nothing about much of anything in here that indicates to me that like he's trying to leave. Even from that options position, like who puts on $68 million of options without the intention like of doing something with, right? So yeah, it's crazy. Absolutely crazy.
And the fact that a big angle on my channel is I talk about the media, right? The media should be like saying how amazing this is. Because like if this is an incredible play, like you said, so much conviction, right? It was so much conviction that you could just ride it and follow it and do well because you know that someone with this amount of strength in what they're doing has to know what they're doing, right?
I think that's a really fair assessment. There's a comment from Franz Zhu who says he 99% could turn few millions into more than 100 millions in 2 weeks. Look how he made 4 days on $500 million. I think the one thing I would note for you, Francis, think about the difference in magnitude, right? Few millions into hundreds of millions versus starting from 200 million and then going to essentially 500 and change. So
or almost at one point he had almost $1 billion, like on the 6th, right? He was super close, yeah. So that's like a 5x, right?
Yep.
Over a couple of weeks.
I think the other thing to note is there's something to be said about like what's possible and then what's probable, right? So when he started going through that, like almost becoming a billion, and I think he made a tweet about that too, which was hilarious.
He said you were a billionaire, which is putting, you got to put your tinfoil hat back on for us, but
hold on.
Maybe maybe he had $1 billion in cash going into this, because if he played just 2020 into 2021, doing 1,000x, or 2019 into 2021, he did 1,000x on his position. There's been enough volatility in the meantime on just this one stock for him to create a very large position.
The only thing I would say, and a couple people have said similar things that I'm just not sure about, is on the stream when the thing was plummeting, he made the explicit comment of like, this is my only account and these are my only positions.
I'd have
So
to go back and watch it. He said, these are my only GameStop positions.
did he say, well, let's find it. I'll find it real quick while you're
Yeah.
talking, and then we can
He
literally take a look
did
at it.
make the quip.
That would,
He said,
yeah, yeah.
and he did say, is cash a position? He did say
Right.
that. So
But
he could
as
have
as he
cash.
did it, he hovered the mouse inside the platform.
Right.
Give me 1 sec. I think I know where it's at.
This is the argument of the century. Does Roaring Kitty, well, I mean,
Yeah, I mean, let's ask the chat. I'll throw a poll in there for them and see what they say.
yeah. What do you? The question is essentially, does he have a large cash or other stock position outside of what we saw in these YOLO updates here? Is
Okay,
this
so
is this his only position, or does he have other positions than this?
Other capital. So does RK have a large cash pile or other positions outside of the E-Trade portfolio he's shared with us?
Because the thing to consider is he posts his 13G trade event is for the 24th. I believe that's
It's a
right.
Fidelity account. My bad, guys. Whatever the account is, I don't know.
No. I think what people are saying is he's got a tab open in Fidelity.
Oh, I see. Okay.
You don't see what's in there. And then in his previous live streams, he's used Fidelity tools. So he could have an account on Fidelity.
I'm gonna grab the screen share from you again really quick, and then I'm gonna share the sound as well.
Yeah.
So I think this is pretty close to where it is. Just one quick admin note for you guys. As I play this, if for whatever reason YouTube flags me, because they always do when I try to play shit, if it cuts the stream, it'll come back on. We just have to chill for a second, is all that is, and I have to turn it off. So if we disappear for a moment, that is what caused it. All right. I'm guessing it's right around here, because this is where, like, literally...
yeah, the most views. There's his position.
There it goes. All right, here we go. And then let me know if you can hear it.
There you go. All right. Cheers. Cheers. I got it up there. So those are my only positions. You know, as you know about me, I'll take.
So you heard what he said?
Only positions.
Yep.
It's a true YOLO again, I suppose. Depending on, I know there's some cash.
Quick side note again. Sorry. Can we just salute this man? He's sitting here with fucking Band-Aids on his face.
And how far down is he on the day right here? What's
just $220 something million.
Like lunatic. I love it. I love it.
You just can't make this up, bro. All right, back at it.
Actually, that's what I mean. It depends on your positions, but it's another YOLO again. You know what I'm saying? It's how I roll. So that's that there. But I seen those headlines. E-Trade. I see those headlines. I gotta check. I'm checking in every day. I'll log in. I'm like, are my positions still there? Are they still there? Let me check. They're still there. Wait, they're still there. Okay, they're still there. I wasn't even like paying attention to the details. They're still there. But each morning I'm like, I don't know what's happening. So I go, all right, well, don't make me, but E-Trade, I'll do this with HTML. I'll do that. Don't make me remove it. I know how to do that. I'm just kidding. No, I'm going to put it back. We're good. Those positions are there. But I'll do it. I'll remove it. Don't make me. Don't make me do it. Don't make me. I'll delete that from the HTML. I will. All right, Mr. Robot Hacker here. You know, I learned a thing or two, and I know how to delete that. I don't want to do it, but I can. I'm just messing, people. Okay, it's still. I put it back. See him? We're like, what the? It's like all green. He's like, oh, he's squinting. He's like, oh, he's waking up looking. I feel like that's me in the morning some days. I'm waking up and I'm squinting. I'm seeing the stuff. I'm like, what?
Dude.
I'm like, what the hell did I do, man? So that's where we're at right now. Oh, did it go down? Oh, did it halted again? Oh, it's halted. Well, that's where it was, right? That's where we're at the halt. See, I wait to the halt because if if it's halted, it doesn't show the stuff. So it needs to be unhalted. I don't know why it does that. It just is. And so, yeah, there you go. There you go.
Did we miss the part where he said his cash position? I think it was like right after his first
Yeah,
statement.
he says it right in the beginning. He goes, there's some cash in there, is cash a position, but we can go back to that. Because I think in the context there, I took it to mean like what's in there. Now, just to be clear, it's difficult, right? Because he's thinking in layers. So I don't think that he would ever purposefully like lie to like misrepresent what he has. I think he's super transparent. But it also would not shock me if all of his wealth was not in this one account.
Right. That seems shocking. I think what he's implying there though is that like this is his only options and stocks at the moment, right?
Yeah, I'll play the front part again to see the cash part specifically.
I'm not sure it's. Oh no, what I'm doing, but it don't hold. I'm gonna think I think it's fine if I bring the. Don't hold it. Don't hold it. There you go. All right. There you go. Is it on the chat there? There you go. All right. Cheers. Cheers. I got it up there. Cheers. So those are my only positions. You know, as you know about me, I'll take. It's a true YOLO again, I suppose. Depending on, I know there's some cash there. That's what I mean.
I know there's some cash there, so I think because there's
play the rest. I think he says
your positions, but and I suppose depending on, I know there's some cash there. That's what I mean. It depends on your positions, but it's another YOLO again. You know
I guess he doesn't say his cash position. I thought
he does. He does say his cash position, but I think he's just kind of riffing off the fact and trying to. At least I took it as. He's trying to reinforce the fact that he doesn't have any other positions. I think he was simply saying that because, you know, he has some cash, which I think in this case, I forget, it's millions of dollars in cash.
Yeah, it's like 30 million bucks almost.
Like 30, yeah. He's like, I got some cash in there. Like, I got some cash. Oh, God. Dude, well, anyways, yeah. So that's what I thought was really interesting because I really do think he's very transparent, and I believe that when he said that, I really do. I take him at his word, but that, I mean, it still wouldn't be crazy to not have, you know, it would not be crazy for him to have some cash in something else. Like, he's still got to live. I don't know if he has a family, but.
He does, and I'm curious how he would have built his Chewy position because this was on he's talking here on the 7th, and then his last update is on 3 days later on the 10th. He's converted now all those options into shares, and then there was one on the 13th.
13th,
yeah, sorry. So 13th is his last one. So yeah, that's a week later. He now only has 11 days to build a position in Chewy. 6% of the company, right?
Yeah.
So how could he possibly do that?
The one thing I think about is using options as compared to buying shares.
Right. Some of it could be options for sure.
Because even if he used in the money options in Chewy, I mean, but like, I also imagine we would see the position. We could see the position. So let's go back to this. Let's go to Chewy. And then what was the date range we were talking about?
So it needs to be, if this is his only account he's playing with here, between June 13th.
Okay.
And I think June 24th.
Okay. I'm adding 1 day on both sides, just in case.
Okay, I think. Let me look at his 13G.
Because it doesn't show the. Does it show the basis in there or no?
Yeah, it should.
Because.
There it is.
I mean, what's the?
I love how it says he's not a cat genius.
That is, dude. Like every time I look at this guy's stuff, there's something in there that like straight up.
No cost basis. Sorry.
I didn't think so. I think it just said like 9,001,000 share equivalent, right?
Which is he keeps memeing on Ryan Cohen as he's doing all this too, which is just so funny to me.
Right. Times.
And the date of this, so it was filed on the 1st, but the date is June 24th.
So there's 10,000 contracts there. This is,
Let me see here.
that's 1 million shares. There's 10,000 contracts here at the 30. That's another million.
Well, no, I don't know. If he did a YOLO update on
The 13th.
the 13th,
These are afterwards. These are the 25th. So I have to use the actual window because those wouldn't apply.
that window, the price moved a lot.
So there's a 10,000 at the 27s, which was a $220,000 trade, but this represents 1 million shares. So far cry from 9 million. But that's
Okay.
There's a possibility, right? Because here's another 10,000, so that's another million. So between these top two, just pretending that these were all him.
Those are on the 21st.
The first one's on the 21st, then this other 10,000 is on the 24th. So let me sort this by size, actually. Yeah, so I see 10,000, another 10,000, call this 5,000. So it doesn't look like he would have done it discreetly with options, but again, pretending that at least some portion of this could be this, then it looks like he would have been able to essentially gain exposure to 1 million, 2 million, 3 million shares for less than $1 million total.
Somehow he's got to get 6 million more shares, right? And they're expensive still. I mean, they're like $20 each at the lowest.
It wouldn't necessarily surprise me if my hypothesis there is that he could have unwound some of his GameStop position. And then my expectation there would be that he would be doing that to enter back in. Like, I don't think he's trying to leave it, but it looked like he was trying to move something in Chewy. That was my guess.
Maybe. We can't know what he does with his positions in the interim. I've told you before, from our perspective, he's never decreased his number of shares.
And it's funny, when I made the video looking at the Chewy position, I actually cited you teaching me about that, because I do think I think that that's important, right, in terms of his tendencies. But because cash had to come from somewhere, and 9 million shares of Chewy. What was it trading at? 26.53, you said?
I have it open right here. The low was 21.80.
Which he definitely wouldn't have gotten in at. What's the midpoint like between the low and the high? Just to
in here somewhere is like 25.
25. Yes, it's a $225 million position.
Right. The other thing too is that like his last meme is, one of his last ones besides the Chewy one, right? You got the hat on still, which is perfect, but
exactly. Listen, I'm baking for both of us. My fucking brain is cooking, but it needs to happen.
He's posting this meme as he puts in the buy order. I think that's abundantly clear, because then he immediately that afternoon YOLO updates with his 9 million shares, right? So he's very, very intentionally here telegraphing that like he's calling a sandworm. So would he then immediately dump shares after buying them? I don't like that would undo his effort to do this. And he's memeing on Ryan Cohen, kind of undoes his memeing on Ryan Cohen too.
I think potentially, but he had a very light cash. I can't believe I think he had 6 million in cash, right? So a light cash position, but not light, right? 6 million fucking dollars, but he had relative to him small cash. So $6 million in cash, a $225 million trade in Chewy goes on. If it's all shares, you can knock off, again, giving the benefit of the doubt, assuming that all of this was him, which again, that's probably not super likely for all of this volume to be him. But again, some combination of it could be. So that gives us 3 million shares here. So then he essentially would still have about 6,001,000-ish shares.
You're looking at all strikes, all expiries look there, or are you only looking at certain strikes and expiries? You're just looking at any large trades.
Yeah. So what I'm doing, I'm sorting it by size, and I'm essentially just assigning this top block of order flow all to him.
I see. Yeah, you've got a mix of expiries there and strikes. Okay.
Yeah, it's kind of everything. Exactly. So I'm just ballparking it. But so if that gives him a residual position of 6,001,000 shares at 25, that gives us $150 million position.
Right.
He had 6 million in cash. So again, you can knock that down to 144, but that's got to come from somewhere. And I know some people were talking about maybe he was trading options around it. In order to come up with that 100 million, we would have absolutely seen that volume come through, and we didn't. So
yeah, I'm just curious. I think we got to wait and see. We can speculate till the end of time, right? Well, it is so fascinating, the timing here.
Because I think that's a lot of the fun part is you know the dude thinks in layers, right? So to your point, and based on the breadth of evidence that we've seen, what was it in this? You showed me it's
over to the right. Scroll to the right. I think you're showing my screen right now on the stream. If you want to show your screen now.
This is it, right? Like his share positions.
It's the column L.
Can you guys see this, or is it not showing you this?
You're showing my screen at the moment, I believe. Or actually, no, you might be showing.
Yeah, this is in my window.
Oh, okay, my bad.
Yeah. Yep. So, and this is what you taught me, is that if we go back all the way through his share accumulation, it's always been more. So that part's also hard to read between, because we know in this time frame he had to do other stuff in order to build the money that he ended up sharing with us that position on, what is it, the 2nd of June or the 3rd of June? His
first post was on the 2nd. Yeah.
And it wouldn't have come from just buying and holding all of this that entire time frame.
Yeah, I'm just going to go with like the easiest explanation, which is this dude's super duper smart and has made other monies in other accounts doing other things over time and came into this locked and loaded, like ready to go. You know what I'm saying?
And I think that's reasonable. Like, I think based on, because the other thing people point out pretty frequently is looking at his older streams, which I went back to take a look at. And I mean, he had a shit ton of positions on it, a ton of stuff.
Yeah, so obviously, he says at one point, I was watching the January 13th stream, he said he was monitoring over 1,000 stocks to some degree.
Which is, that's just madman level right from the jump to even try to trade 1,000 things, right? Like, that's nuts.
Yeah.
I struggle keeping an eyeball on like 150 names.
Yep. Yeah, he's operating on a level that is completely unbelievable. But I was going to point out, I did want to point out really quick here, I thought the timing on his, because there's always all this timing going on between his YOLO updates and his tweets. So his most recent tweets were when he's buying the shares. Then this one seems to be the McEnroe, I think this is McEnroe, or I don't know who this is, this tennis player. This one's on the 17th, which is when GameStop's volume drops off a cliff, right? And then this one is like this one about this movie Bruno, right? Where he's talking about going away. He's a prophet sort of, and like people don't like his prophecies. Mm-hmm. And Bruno, I believe in the movie, people said goes away for 10 years. So he goes away for exactly 10 days, calls the Chewy spike to the day. This is when Chewy hit $40. And he had built his position in Chewy, leading up right into that spike, especially on the 24th. And then he filed a 13G a couple days later. And then we didn't know what this meant. at the time, but then this is like his 13G gets, and then we look back and we're like, oh, that's weird, Chewy. So it's like,
quick question.
yeah.
Do you think that there is any forewarning with the Chewy position between those two components?
Between here and here?
Yeah.
Well, there's the 35 emojis in the Missy Elliott meme, and the dog is in one of those, right? So I don't have those 35 emojis off like on hand. I should.
If
Probably
you give
need a
me
tab on the
I was gonna say,
spreadsheet.
if you give me a second, I had them. Yeah, give me 1 second. I can grab them.
Yeah, I should probably just put them down here.
And can we also just shout out the fact that we're talking about emojis from a Missy Elliott video?
Right. Where even are they in the whole? The fact that I've got all these memes here.
I mean, sooner or later, you and him are gonna have to go out for a beer, like a seltzer water or something. And dude, I feel like that's probably fair at this juncture.
This guy is operating on levels. Well, here's the other thing to think about. You're probably aware of this. So he's clearly, so he's got his three personalities, right? He's got his crazy YOLO posting account, DFE. He's got
you told me about this.
He's got his Roaring Kitty Twitter, right? Where he posts tweets, and then he's got his live stream personality and his Keith Gill personality. But what's crazy to me is this idea that you can go all the way back to his memes he was making back 4 or 5 years ago, or how many years ago was it now? 3 or 4 years ago. Lost you there. There you are. And he was telling the story even back then, because if you look back at his memes, like for example, let me pull one up for you just to give you an example here. I don't know if you've gone back and watched these. This is where things get so crazy to me. Check this out.
I'm gonna go grab a water real quick, but you can keep going.
Let me find his one back here. There we go. All right, so for the folks watching along, Eric's grabbing a seltzer water because he's addicted to those things. But Roaring Kitty's memes from even back in the day have the same characters. I think we've even got, let me find, so here's green. Green represents DFE. So John Candy is DFE. Yellow are all the long holders on GameStop. And then we've got, let me try to find the spot where we get, there we go. Here's Ryan Cohen right here in blue. So he's been telling this story the whole time with his characters, and he still just picked it up right where he left off 3.5 years later. And I think that's absolutely crazy. It's just, it blows my mind. You guys can tell me in chat what you guys think about that whole thing. Pull this up again. So let me see. Where's Eric? We lost him. I'm trying to pull up the chat right now. Oh, there you are.
I was just grabbing reload on seltzer waters, man. I told you. It's like I go through so much liquid, especially because like I typically intermittent fast, but the choice liquid is seltzer waters, bro. Oh, are we watching this? Do you have it sharing volume?
I was just showing it, the volume I'm not going to show. I'm just showing that the characters are already defined. He posted this.
No, I was going to say you should play it.
Let's see. Can you hear it?
Negative.
Okay.
When you go into share screen, there's a specific tab, like if you're sharing your window. So if you unshare your screen and then share it again, there will be a thing that'll say share audio.
Well, I just wanted to show that this was posted all the way back March 30th, 3 years ago, right? This was his last like big meme that he posted before doing his final YOLO update, double down on his position. But his characters are already all defined. Yellow are Wall Street Bets long holders. That's us saying what's going on here. He shows up as John Candy, basically saying, I can help you out here. This is his green is DFE. And then he points to his crew, and his crew is Ryan Cohen in blue, because that's always been his color coding that he uses here. It later refers to the blue character as Chewy. He's talking all about GameStop here. You got to kind of watch it to get a sense for it. But I just think it's crazy that he had already, there we go, Chewy, same guy. So they're going to cruise along and pick them up. So, this is the Wall Street Bets people saying, my GME position's down. I bought in January, then I got a diamond hands forever. But now what am I going to do? He's got the crying Michael Jordan emoji right here. Right? It's so funny. And then basically he says here at the end, there's risk and I can't guarantee anything, but I expect GameStop will be able to drive you to your cost basis. It's on the way to what I feel could be fair value. It took 3.5 years. This is crazy, right? Crazy that
dude, it's nuts. It's absolutely nuts. Quick admin note from the chat. Dun Oak says that they want to do a poll to see if you are cooler or Darth Vader, which Dun Oak, I'm happy to do that, just provided that we revisit basic manners. And if you phrase that like a human being, I'm happy to run that poll for you. In the meantime, there's a poll that's going right now, which is, do we think RC will extend an offer to RK to join the investment board? 36% say yes, 64% say no. What say you, Richard?
I would say no.
Yeah,
I don't think that would be a wise decision at all.
I agree.
I think that the two of them don't have any communication. They really shouldn't, for legal reasons. I think that Ryan Cohen's got to be extremely careful. Everyone in GameStop's got to be extremely careful. The whole thing's under incredible scrutiny. Same thing with Roaring Kitty. So like you said, he's very honest, and he's trying to be very transparent. I think that's what he's telegraphing every step of the way. And I wouldn't expect anything like that to happen.
Yeah, I think that's fair. And I think people might slightly misconstrue like the intentions of accumulating a lot of shares, which is the idea of conviction as compared to, trying to move into leadership or run the board or something like that. That seems slightly different.
He also says on his stream, I've mentioned this one a lot because I just rewatched it, his January 13th, 2021 stream. I recommend everyone just watch it. But he says on there, like, he doesn't know how to run a company. He says, these aren't my areas of specialty. So like you just said, picking up a huge stake in a company doesn't mean you want to run it necessarily or get involved in its runnings.
Right. Yeah, I agree with you. It looks like Dun Oak remembered his basic manners, and we are ready to launch a new poll to see, is Richard Newton cooler than Darth Vader? I'm curious.
Is Darth Vader cool?
I was literally going to ask. I thought maybe there was some background to why the Darth Vader selection, but I'm a man of the people, provided that the people are respectful. So I'm going to ask the question anyways. The poll is open. Let us know if Newton is cooler than Darth Vader. That's tough, man. Like, Newton, I got to be honest, man. Like, I genuinely think you're an incredible person, but Darth Vader, like the Force, he nuked Luke Skywalker's arm. Like, have you cut a dude's arm off with a lightsaber? I guess we could start there.
I have not done that.
And then I guess the only other following question is, have you survived being thrown into magma and then gone on to walk around in a crazy suit?
No, but the last 3.5 years of GameStop, very similar.
Okay. So maybe there it is. And then also, here's the other question we have to ask ourselves. What kind of collector Pokemon cards does Darth Vader have? And did you show us yet the ones you were showing me? Because we got to take a look at those really quick.
So we did pull a Glaceon so far.
Check that one out, everybody.
So
and
that's a variety of different Pokemons. So we got the Glaceon one, which is over here, which is pretty exciting. So I thought that was pretty cool because we had talked last time and we talked about how Eevee's our favorite and your wife's favorite.
Yeah.
And then we basically immediately pulled out of, I don't know if it's a pack from the ones you got us, because we've got kind of like a big old box of packs.
I was going to ask what was, well, anyways, I'll ask you afterwards. I'm curious what was in those compared to I don't know shit about Pokemon beyond when I played it on Game Boy Advanced. So you're teaching me.
So far we got a Glaceon, so that's exciting. We'll see what else we get.
And is Glaceon, is that like a standalone critter, or is
No,
that...
so a Glaceon evolves from an Eevee. So first you got to play an Eevee, and then you can evolve it into a Glaceon.
Guys, quick note, Vamp Lols, you are my hero. The platform is finally back up.
Oh, there you go.
This is tremendous news, a giant win, really for me, not so much for you guys, because for me, it just means I get to talk about options, which we all know your boy can do. But
well, let's do that. Do you want to pull those up and show people? I do have to go in like 15 minutes, if that's cool.
Totally cool.
So
let me grab this.
I'm curious what you can show us with GameStop options on your platform, because I just learned so much earlier. I found that to be so valuable.
Oh, dude, this, I think we'll be able to dive a little deeper, hopefully. I'm just checking real quick to make sure that the information is accurate. Yep, it all looks good. Cool. All right. Ah, there it is. Isn't it just nice? It's like being home. Like if you get back from a trip and you get back to your house and you're like, man, it's just good to be back. So let's dive in. Now, of note, if anybody has any questions on the options chain as we go through this, let me know. There are some pieces missing, like this isn't here for some reason. Typically this would be here. This is all blank. So we're working with partial information. It looks like it seems like they're still updating it, but we have enough to work with, I think. Oh, okay, sort of. So one of the things I was going to show you guys was the expiration volatility, which is actually kind of important. So for that, I'm going to grab a recent video that I did. Give me one sec just to kill the sound. It's going to be kind of like me Inception, but in here, this was after the market closes and we look at the options chain right there. So you can still kind of see what this should be, even though it's not populating. So what I noticed first is the primary expirations continue to maintain much higher volatility. So that doesn't inherently surprise me, but I do find it somewhat interesting where the volatility is centered. So in this case, the 19 July expiration has 139.5% vol. The following expiration goes down to 127, then down again to 120. So right now, the market is pricing in more activity here in this expiration cycle, essentially compared to anything else in the options chains so far. So this is not highly novel based on what I've seen so far as I've been following GameStop essentially from the end of April into May. But it nonetheless, I think, is noteworthy, at least in terms of trying to track where things are happening. So that's the first note. And a quick note on what this means, in case anybody doesn't know, the implied volatility here, like we talked about, this is what the market is pricing vol at, and we're just kind of pulling it out. And it's just a projection of expected volatility, which is just movement. How much do we think something's going to move? If it has a higher percentage, it means that we're expecting it to move more than other things. You will notice, however, that some of these with lower percentages, like this one out here, shows 121% vol, but a bigger dollar move, $8. It's because it's relative to the amount of time. That's all. So
are you showing the right screen right now, Eric? I don't know if I'm seeing what you're pointing at right now.
It looks like I'm not, which is really fortunate that you told me that, because there we go. This one.
There it is.
So, yep. So this is just me inception. So and it's kind of blurry. I don't know how easy it is for you guys to see. But what I'm showing you is that the expiration volatility for 19 July is high on a relative basis to everything else around it. So that just means the market is expecting movement, is the punchline. And then the other thing I was explaining to people, because I've seen a series of questions about, well, why is the expected move? That's what's within the parentheses is the dollar move. And then out here is the implied volatility. So the question I've seen is, why is it that this has a lower IV, but a higher expected dollar move? And the reason for that is because this IV is relative to the amount of time remaining. So even though this has a higher implied volatility, it's relative to a 7-day period as compared to 30 whatever day period. So just to clear that up for some folks. So the first thing I do notice is interesting volatility. It's not sky high. And again, this is not what we saw back in May. Back in May, this was like in the 200s, 300s. It was astronomically high. So I think it's worth pointing out a differentiation there. Now, going back to the platform.
Could that have anything to do with the idea of leading into earnings? Because earnings was due for early June.
It's a good question. The expiration cycle that would contain that earnings release would have relatively higher implied volatility, but it would be the cycle that offers exposure to the earnings release.
Okay.
Yeah. So right now, what I see for open interest is there definitely is still pretty heavy call skew in terms of OI, more calls than puts. We've seen this pretty persistently now. This is a lower gap than we've seen. So I think that is interesting to me. Now, in terms of concentration of where these options are, we can see that 19 July is absolutely the belle of the ball. This is the busy one. And you can see the next cycle that is most active is this 16 August. And again, this will line up very beautifully with the primary option expirations. This is literally, it's for liquidity. If you're going through and you're trying to trade options, the standard expirations, especially in something like GameStop, are going to be more liquid. So people that are looking to put on bigger positions will go out into these expiration cycles. The other thing I'll show you quick is volume from a call perspective is much higher than call side than put side. So we are seeing still a lot of transactions in building. However, there are a pretty noteworthy amount of puts going on as well for 19 July. So all of this boils down to we are going through and building out very clearly this expiration cycle. That's essentially what it boils down to. So
quick question.
Yeah, man, of course.
So a bullish trade would be selling cash secure puts, right? So that would show up in the OI for puts, right?
It would. Now we can detect how the market is leaning as they're establishing their put positions, and I can show you how very quickly. We go back to this one, and let's go back to GameStop, and then we'll look at like the last week. There. So what I can do is I can look at the put side, and I can look for put transactions that occur at a specific spot. We can determine if the option was opened via buying the option or selling the option, if it transacts at the bid or the offer. So in this case, if I want to see if people are putting on a bullish variation of a put, meaning selling puts, I can see the transactions that occur at or below the bid. So this is how I can isolate if we're selling or buying puts. Now, I want to be very clear. This is still a kind of swag. This is still an assessment. It doesn't mean definitively. It just means the overwhelming probability is that being the case. So that's why we classify them as this. I think it's important to decipher for people the things that we can conclusively say for sure versus the things that we're taking as good of an educated guess. But this one is as close as you can get to something that's probably affirmative without it being, 100% affirmative. So most of the put activity that we see that occurs at the bid or below for the last week, relatively small positions. The biggest ones we see are at the 125s, and they're $100,000 positions combined. This looks like the same trade to me because it occurred so close to one another. And what this looks like is they submitted this initial order and then they moved it, but this is all the way out in 2026. So hard to tell what this person is attempting to do. If we limit this to the 19 July OPEX, something a little more current, we see some transactions coming through here, but none of them are even over 100,000. Like the bulk of this is probably less than $500,000 easy. So not a ton of put selling going on. Now, the other thing we can do quickly is to take a look at this theory about using calls. Maybe Roaring Kitty is selling calls, right, as part of against the shares to try to generate some sort of profit. And when I look at the overall transaction volume for the call side, specifically with those kinds of orders, which would be calls that are happening at the bid or below, that would tell us that we're selling. There's some positions coming through, but they're not massive either. So the total premium being pulled in here is not, it's not crazy large. Now, the other thing I wanted to do before you have to jump while we have a couple minutes is actually go back to this, and we can model Roaring Kitty's position and we can actually see what he could have made. I think that would be fun.
Okay. Yeah. That'd be fun. Yeah.
Yeah. So we're postulating that this would have happened. I'm sorry, remind me again, the date window that we think it would be.
Well, Jackie said large call buying occurred twice, but specifically May 1st, 2nd, and 3rd.
No, is this there was a ton of call volume there. I thought we were looking at the gap to try to build the Chewy position, or is this the idea that this occurred back in the beginning of May?
Let's do the GameStop position.
Okay. But was one of your ideas that he was trading GameStop to create enough capital to then roll into something else? Was that the idea from before?
I have zero idea how he could have built the Chewy position. I really don't know. Because that's a mystery to me.
Okay, because I thought one of the things we wanted to look at is the probability of him being able to turn what was it?
He only had like $5 million or so, because his last YOLO update he had 3.6 million. So I'm just saying let's round it to 5 and give him the benefit of the doubt. So if he's
shares, got it.
If he's got $5 million bucks on April 24th, could he have turned that in 3 weeks into the $170 million or so that he needs to buy all those calls and shares?
And what was the date? The 24th to when?
So April 24th would be his start date with $5 million bucks, and then May 15th is his end date.
Okay. Yeah. So what we can do really quick is just kind of simulate this. So we can go back into on demand. I don't know how well this is going to work with the platform where it's at in its life right now, but we will see. So I'm going back to the 24th of April of 2024, and we are going to take a peekaboo at these options. And what I'm going to do is build a highly advantageous position for him to see how this falls within the realm of possibility, essentially. So we know from 24 April to 15 May, what was the high? What day occurred that posted the high-end stock price?
The high was the 14th, but he could have bought weeklies. He could have bought and made enormous profit buying expiry for the 3rd or expiry for the 10th and done extremely well.
Okay. Yeah, so what I'm doing is I'm just figuring out the days that we had big price movements, and I'm going to build, again, like the most advantageous position I could think of for him, which, what was the high on 14 May? It was like, I don't remember.
64.
64.
83. That's where it
So
opened.
let's say that he bought maybe these 15s. So these are a 13 delta, and they're trading for 18 cents. Again, like, we kind of know he didn't do this because I would have seen the volume come through for this, especially to put on a position this far out. But just to see even what's within the realm of possibility. So we have $5 million divided by 18. That tells me you could put on 277,000 contracts, 777. So that's the position we're looking at, 277,777. The reason why I'm using these options as being most advantageous to him is because even though they're a really low delta, we know there's a giant move that occurs in this time frame. So this would give you an idea of what the compounding could look like if essentially we built a, again, near perfect position relative to the period that we know. So this comes in, as you could tell, at like 4.99 million, right? We're using essentially the full $5 million here. So now what I'm going to do is fast forward us to 14 May. And then we can just see what these options traded at, and then we can see what his P&L would have looked like. Okay, so this would give him essentially $1 billion if he ticked it that way. So
Nice.
yeah. So if in the like most optimal scenario was able to put on a position like this in some degree, then it is entirely possible that he could have scooped up the capital to do this. Now, again, we can kind of steelman the argument to a degree by changing what we're looking at really quick, going back to unusual whales. We can go back into GameStop and we can look at this time frame again, 14 May.
You'd want to look specifically, I think, at 2 windows: the 24th, 25th, and 26th for big purchases of calls.
The 24th of April.
April, yeah. Sorry, those
so
3 days.
Yep. Let's take a look real quick.
Let's see if there were any good buys there.
And then let's kill that. And then let's kill that. Okay. So we have the 10s being pounded several times.
Yep. That's what Jackie posted, was the 10s. Well, actually, this is on the next week. He hits the 10s up. So this is earlier.
And these would fall right into that. I see 17 May. So I see 1, 2, 3, 4, 5, 6, 7. Uh, 24 May, 7. Maybe just call it 8. So I see 8, essentially 8,000.
What about the May 17th, though? Because those May 17th all printed.
Yeah, I'm using so I included both of those up here.
Okay.
Yeah, so if we use both of those expirations just to clean this up a little bit.
Yeah, he would have targeted those for sure. The 17th and the 24th. I don't think he would have targeted. He could have targeted May 3rd. Is there much activity on May 3rd? That would have been highly risky. Or April, no, May 3rd. May 3rd.
Well, let me see. Let me just sort this.
Super risky.
Oh, no.
No. Doesn't look like activity for the 3rd.
Yeah. And I think him trying to build a position in that would be really, really difficult.
Well, then what I think he could have done is sold them all on the 3rd to raise a whole bunch of.
Sold all of what?
He could have sold a lot of those when it peaked on the 3rd, because it hit a high on the 3rd of
Okay.
1745. He would have made a ton of money, and then he could have moved. He could have moved up to the 30 strike that day.
Well, let's take a look then. So if I give him credit for essentially pounding all of the 10s, let's just look at the 10s. And then again, we can literally simulate what this position could have yielded for him. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, all this and this 13. So probably 14,000 contracts ish total.
Those are cheap, right? That's only going to cost him.
It looks like the average price here, well, there's a couple expensive. We can do the math really quick. So 14,000 and then 260, 227, 225, 220, 205, 200, 181, 165, 150, 146, 140, 114, 70, 65, 50, 35, 21, 20, 20, 19, 19 times. So this would be like a 20, 25. How much cash did he have?
Like 3.6 million.
So he would have been way over if he did all of this. So then let's just give him credit then for 3.6 million worth. And then if we look at the average price, just kind of by eyeball, I see, let's call it probably close to 2.
That's what I was going to say.
Yeah, we'll call it 2. So let's say $3.6 million divided by 200 is 18,000. So essentially, we're not fully calculating correct based on the average price. I think we're lowballing it a little too much. So then we could just say maybe he picked up maybe 11,000 contracts ish. And then let's call it that came in at 3.6 million. So 3.6 million divided by 11,000 divided by 100. Yeah, that comes in at like 327 or something like that. That seems a little high, but we can see. Just to have an idea. All right, hop over to this. And then we're saying that we think this happened on
April 24th, 25th, 26th.
So we'll just pick the middle and just pretend that we built the whole position all at once. This is the cool, like, you have no idea how much I love this. This is like detective work with trades.
Yeah, it's super cool.
Yeah. So we can say we think the expiration he was transacting was the 17 May, but we're going to go to 3 May and pretended that he unwound there. And we were looking at the 10s. So let's say that he built his position of like 11,000. And then let's say that the average price for the whole thing, I'll round it down like through maybe like 2.75. I think that's probably a little closer to accurate. And then we'll analyze that. That comes out to like a $2 million outlay that keeps him within his range reasonably. And then let's move us out to 3 May and let's see what these would be worth. let's see. Oh, dude, I'm waiting with a bated breath. Want to know what this number is? 825,000.
They lost. Wait, that's it?
That's how much it would make. Yeah.
Seems so small. Well, the price went up to $17 that day though.
Yep. And it looks like those 10s traded for 375.
Okay. That's not a big gain.
It's not massive. No.
No, that's terrible.
Yep.
So what if he built his, so Jackie's other thing he looks at is, I'm probably badly quoting Jackie. What if he built his position right into that cycle then? What if he built his position on May 1st, 2nd, and 3rd? Do you want to look at big, 2nd, 3rd? Yeah, let's look at purchases there.
Let's take a look. May 1st, 2nd, 3rd. May 1st, 2nd, 3rd.
And we'd be looking at strikes from 10 to 30s.
And then let's look at the call side, hitting the offer. Okay. And then it looks primarily like the 17 May expiration is where I see the size coming in. Do you think that he would have spread out between multiple expirations?
No idea. Probably pretty short dated though. I don't know. If he's going super YOLO on a cycle happening in the short term.
I would imagine then probably the 17s would be my guess. So if we look at the total size there, just to again eyeball it, I see 1637. I see 1067. I see 855. And I see 959. Find any other big 17s here.
So it doesn't look like blocks here, right? During this period of time?
Nope.
But there were blocks in that earlier period of time. So he could have held those all the way up into the 14th, I suppose, right? The ones we built out before.
And we can see what those would have been worth there.
Yeah, then maybe he didn't do 2 periods of buying.
Because that other one, it doesn't really seem on brand for him, I should say.
What would these be worth on the 14th? Yeah.
Take a peekaboo. 11,000 of them. We can even guide this down. Let's just call it 2. Give them the bigger benefit of the doubt. 19 mil, 19.6.
See, that's not nearly enough though. He needs to build hundreds of millions of dollars.
Right. That's what I was saying, like with the responses from before. It's why I'm fairly skeptical of turning the $3 million into that. Like, even if we give them, like in this case, I'm giving them
the
a pretty big benefit of the doubt. Yeah. So, I mean, even if we size this up, let's say he scooped the 18,000 corresponding size, which that's more than what even traded in there, but that would get him to just 32 mil.
Yeah. It just seemed like, so, questions as we kind of wrap up the stream here.
Yeah.
Where did he possibly come up with $170 million to pick up 4.2 million shares? We don't know when he picked up those 4.2 million shares at all, right? Those first 4.2 million on top of the 800,000 he had. We do know when he bought his 20s. So we know he had to have had 60 some odd million, $65 million during the share offering to buy all those 20s. Where did he get all this money?
I think there are 2 solutions I can think of that are the simplest ones. The first one is he has money in another account somewhere. I think the solution beyond that is that he unwound some of his GameStop position to acquire. That's the second idea.
Mm-hmm.
Yeah, because I like that was like my biggest question as well, is I was trying to conceive of what, like, it's not it's not a small amount of money. That's not easy to generate that amount of capital.
Yep.
So because
And that's
the other
basically
thing,
what is it? Andrew Citron Capital. What's his name? Andrew,
Andrew
Left.
left. Yeah.
He keeps asking the same question. The media is asking the same question. Good question.
Yep. It's a fantastic question. Because like, do I think that maybe he has money in another account? Potentially, sure. That's possible. But is it $100 million on top of the 100,000,060 or whatever he had in his primary account? Could be, but like I don't know. That seems like a ton to me. I was thinking more that he might be siphoning out like 20 million, maybe something like that. That I think could be conceivable for somebody like him that would set up his family for life. But yeah, it's, to me, the simplest would be unwinding some of the GameStop position. But to your point, I would find it really hard to believe that he would go through the effort of accumulating 9,001,000 shares to then unwind it. But then it's also, again, I go back off of the same thing of like who we're dealing with. And would he potentially build that position to essentially, send the message to Ryan Cohen, high five him, and then do something else? Not impossible either.
Yeah.
So if you think about it based on what we looked at, what is your best guess on where the capital came from?
Well, there's the curiosity too that is my screen sharing right now?
It is.
So a curiosity pointed out is right here, which is between these two updates. This one on June 3rd. Look at his cash position here. 29.2 mil.
Yeah.
And then it goes up, it ticks up. And this is going to be interest earned on the end of May. It's pretty obvious.
Uh-huh.
But the E-Trade accounts for having over $1 million in your account only earns you 0.15%.
The disrespect.
Right? It doesn't earn you 5.5% like your money market's going to yield you or something else going to yield, unless you have to specifically put it into that vehicle. It's in this right here. My understanding is it's going to earn 0.15%. So if we just do simple math here and where's my calculator? So if we take how much that represents as a yield, so I'm going to do 29,409, and then we take away 29,276.
In the meantime, Brad says a guy who loves trading is quite good at it. For 3 years, wasn't trading. He has a large cash reserve built up for this. I agree with Brad's idea there. Again, I think the only crux to that idea is if he was being honest during that live stream, which I take him at his word. He's saying that that's his account and that's his cash. So we're working under the assumption of that being the case. But to your point, the wild card is kind of what Newton and I were recently talking about, the fact that this could be money from somewhere else, but we're just kind of working off of what we can cleanly see.
Right. If he's got, is this going to work out correctly? I don't want to, the number here bothers me, but if he's got this amount chilling in the account at end of May, and it's been in there all month, and then he gets this would be right? 0.15%. That would be the difference there, right? That's all working out correctly. But that makes sense. He would have had to have a bunch of money in there. I don't know, people were saying he would have had to have $1 billion. Am I doing the math here wrong? So here's $1 billion. If he was earning a yield of 0.00, or this would be 1% yield, but E-Trade only pays 0.15% yield, he would have got a huge dividend at the end of the month. So I don't see evidence of him having $1 billion in the account unless I'm doing something wrong here.
Yep, I agree with you.
So
I still think that you would have seen it in the cash anyways.
But he would have had in May 90 million maybe to play with.
Yeah. And that I think makes sense at the start of this, right? Like, because he came into this whole May move with a big bankroll. We saw in his initial position, what was it, 168 million total or something like that? What
Well,
was
actually,
his
this makes
first?
perfect sense. This actually makes perfect sense because look at the, sorry to interrupt you, but we got the
Yeah, no,
cash
no, no.
here. How much did the options cost? Like 65? So that's like the perfect amount. He just probably just rolled right into this with the money to throw down on the options. So he probably came into this with the shares already.
Yeah, I think that that's fair because also we could see. Well, I don't know if he had the shares because the price of 21,274.
Well, he could have bought those, and actually his cost basis, we're going way over that 15 minutes I said though, but the cost basis on those guys should have been, if he held his previous existing shares, these guys, they
Yeah,
had a
which
cost
would have.
basis of 13.79. His new ones had a cost basis of 21.27.
Yep.
He could have got these at any point along the way, right? Lots of times when the stock was at $21, going back, just look at the chart here.
Oh, you're saying over the past 3 years.
Yeah, he could have bought these at any of these points.
I see. Yeah, I follow you now. Yep. I think that
So
that
he could
is,
have built up $90 million in his account, accumulated a big position over time, came into this ready to YOLO update after buying a ridiculous amount of calls. I don't know.
well, I think to your point though, that seems more probable than that capital being generated in like right at the begining of.
Yeah, from here to here.
Yeah.
Yeah, that seems unlikely. All right.
Yeah.
Well,
Dude,
cool. I think that was a great GameStop sesh.
fascinating. Absolutely fascinating. Have an absolute blast doing these with you, man. So, well, first off, I don't even know how many people we have hanging out. It looks like there's about 450, 500 people in here. So shout out to you guys for hanging out and chatting with us about this. I think the idea for Newton and I is to keep a cadence doing these because we both enjoy taking a look. So we'll probably take a look at doing another one next week. Obviously, I'll catch up with you to see if that works for you. But if we do, it'll be same time, same place. We'll announce it for everybody. Newton, as always, man, thank you for coming in and dropping dimes the entire time. Super, super fun session.
Likewise,
Thank you,
that was cool. It was super fun to learn options, learn from someone that knows a ton about them. So thank you very much for sharing all your knowledge.
Yeah, dude, absolutely. I love this stuff. So everybody else, we will see you throughout the week. OMG says set an agenda next time, please. Bullshit. As if we go where the winds blow us, man. That's how this flows. But thank you guys a ton for hanging out, and then we'll see you guys next weekend. Peace out.
Thanks, everybody. Thanks, Eric.
And I think, let me double check.